Hello guys, welcome to Cadexa. Before starting the video, let me ask you a very simple question. Have you ever wondered who helps giant companies like Apple, Reliance or Tesla to raise billions of dollars when they need money? Or who advises when two big corporations decide to merge? Behind the scenes, it is not just the CEOs. There's a special kind of bank that makes it all possible. And no, it's not your regular bank where you and I open saving accounts. It's an investment bank. So let's understand what is an investment bank and what they really do. So an investment bank is a financial institution that help companies, governments and even wealthy individuals manage big financial transactions like raising capital, buying or selling businesses or investing in market. Think of them as the financial architects of the business world. While a normal bank gives you a loan or accept the deposits, an investment bank designs and manages large complex financial projects. To make it clearer, let's compare it with a commercial bank. A commercial bank is like your neighborhood doctor. You go there for everyday needs, depositing money, withdrawing cash, getting a loan, or using a credit card. For example, SBI, HDFC, or ICICI. Whereas an investment bank is like a heart surgeon. They handle complex, high risk, large scale cases that requires deep expertise. For example, Goldman Sachs, Morgan Stanley, or JP Morgan. So, while commercial banks serve individuals and small businesses for daily banking, investment banks focus on big corporations, governments, and wealthy clients with large transactions. Now, let's go step by step into the major functions of an investment bank. I'll explain each one with examples so you can easily relate. Help companies raise capital. Imagine a startup that wants to expand globally but needs $500 million. Instead of going to one bank for a loan, they can raise money from many investors through shares or bonds. Investment bank act like a bridge. They connect the companies with investors. For example, when Facebook went to public in 2012, Morgan Stanley and Goldman Sachs helped them to raise $16 billion by selling shares in the stock market. Now let's move on to the second function of an investment bank, that is underwriting. Underwriting simply means taking the risk of selling new securities. Think of it like this. Suppose a company wants to sell 1 million shares at 100 rupees each. What if nobody buys them? That's risky, right? So investment bank steps in and says, don't worry, we'll buy the shares ourselves if the public doesn't. For example, during IPOs, that is initial public offering, firms like JP Morgan and Goldman Sachs often underwrite the shares. This guarantees that the companies gets its money doesn't matter what. Now let's move on to the third function, that is research. Investment banks also have large teams of analysts who study industries, companies and market. They produce detailed research reports that guide investors on whether to buy, sell or hold a stock. Think of them as a financial detectives who analyze companies. For example, Goldman Sachs regularly publishes reports predicting trends in oil prices, stock market, and technology sectors. These reports influence global investors. And the fourth function is sales and trading. This function is about buying and selling financial securities like stocks, bonds, currencies, and commodities on behalf of clients or even for bank itself. It's like having expert brokers who knows the market inside out and can execute trades in seconds. For example, JP Morgan's trading desk might buy government bonds for a pension fund or sell shares for a mutual fund. And the fifth function is asset management. Asset management means managing money for clients like pension funds, insurance companies or even governments. Think of it like hiring a professional gardener for your wealth. Instead of you deciding where to invest, the investment bank does it for you. choosing stocks, bonds, or real estate to grow your money safely. For example, BlackRock or Goldman Sachs manages trillions of dollars on behalf of their clients. Now moving to the sixth function, that is wealth management. Now asset management is usually for big institutions, while wealth management is more personal for high net worth individuals. Imagine you are a billionaire. You don't just need saving advice, you need a full plan for taxes, inheritance, investments, and retirement. Investment banks provide such tailor made financial planning. For example, UBS and Morgan Stanley are famous for their private wealth management services. Now, the last function of an investment bank is mergers and acquisitions, or M&A. This is one of the most exciting roles of an investment bank. When two companies want to merge or when one company wants to buy another, investment bank act as an advisor. They analyze the value, negotiate the price, and structure the deal. For example, in 2015, when Heinz merged with Kraft to create Kraft Heinz, it was Goldman Sachs and Lazard that advised on the $46 billion deal. In short, investment banks are the matchmakers of the corporate world. So let's quickly recap. Investment banks are not your regular banks. They help you raise big money, underwrite shares, provide research, trade securities, manage assets, advise the rich, and guide mergers. They are like financial engineers of the economy, powering the growth and expansion worldwide. Next time you hear news about an IPO, a $1 billion merger, or an government raising funds, remember there's an investment bank working silently behind the scene, making it all possible.